today, what I chose is to look over is the SPY, and I'm going to go over a few positions that I took on this. And I was fairly late as far as timing goes, but uh, the flow and everything that I saw so far with the options was pointing towards the downside. So what I saw was um, this morning and all throughout the day, I saw that SPY was um, saying around 384, which we were at. I went ahead and took a position to the downside on the puts, and what I saw was, if I can go ahead and pull it up, the total amount of volume on the put side was 2.2 million confirmed versus 1.5 volume confirmed. I saw that the majority of the call or the puts were traded at the ask or above, and we can see the call and put index for the sizzle size, which is just basically the last week, the change in volume or open interest on those contracts were uh, fairly trading higher than the previous days. You can see that the calls were obviously traded more, but the put to call ratio, so the amount of puts that are out um, versus the calls, we can see that there's a higher put ratio, so we're expecting that move there. So what I had previously done was taken a position on the July 20th, 28 put, July 20th, and I saw that our expected move was almost $5, and our implied volatility was 28.68%, which it was fairly higher this morning. So what I did is I picked up a 384 put, and I bought that for around $1, so about $100 on the option side, and then that ended up going down. So I looked at the volume, and then I also looked at the delta imbalance, and the majority of the of SPY's trading was towards the downside. It was a negative delta. So what I did is I picked out this 385 and 384. I bought both of these, and I'm holding them. So if we look at our theta, we can experience, this contract is going to be pretty much worthless tomorrow if we don't see a downside um, at all. So that would be our theta. Our delta, so our price movement. So if we were to move, let's say 5 points to the downside, we would see $20 per dollar move. So that gives us $100. That'll bring these contracts up to 182, and our 384s would be brought up to roughly 160 or 150. Now we can see the market makers today they're expecting a 2.411 move on the SPY, which I don't see any reason why this would go down today, to be honest. But fairly enough, to be fair, the delta imbalance was so high that we would expect something towards the downside. It's fairly bullish, and that's what I'm seeing in the flow, which is odd, considering we've rallied in the past 3 days. So as far as technical analysis goes, I really don't look at that. I look at the probability of the probability of us either getting in the money and staying in the money, or the probability of us touching. And I'll go ahead and pull that up right here, and we'll go ahead and say probability of touching on the 384 and 385. So when I filled these contracts, the 384s and 385s, they were roughly around 60%. There's a 60% probability that the stock would go down and touch our 384 mark, and there was a 55% chance when I purchased these 385s, or vice versa. So what I was expecting is, I'd have roughly a 5% edge on the trade, and I was wrong. As far as now, I'm thinking I'm wrong, but we do have, 1 day left till expiration, so we'll go ahead and wait and see what happens there. But as far as technical analysis goes, if you want to go as far as identifying the chart and checking out, what could happen or what pattern is forming, which I typically don't do really anymore, is we do have this consolidation that we can see. We're range bound. It looks like the lows are at 370 and the highs are roughly about 391. So if the price was going up today, I would expect it to go to 391, and that's where we would see if we have a continuation or a breakout of the consolidation. So at 391, if the stock is trading any higher above that, we would expect, a move to the upside. Now we do have some liquidation up here at 392.75, so 393.02. I'm sorry. Hold on. 390.22. Okay. So if the price was to break through that, it would probably even want to surge up even higher. I don't know yet. We'll see. But as far as consolidation goes, I expect us to be in that phase. That's where I see us in. So go ahead and get a wider view. Wider view looks like, yes, obviously some consolidation here. And I really do like these patterns because they typically go range bound and gap up, and it's really nice. We can see that here when we had it previously forming. In this area we had a little W, and we broke up to the previous past high. So the previous past high was up here at 409. I would expect, yes, we might see a price move to 409. But on the other side, we might see a price move down to 372, or even worst case scenario, 362 and below. As far as economic data and CPI consensus and all of the metrics that are going on in our global economy, I don't see why we would experience such a rally. But everything is possible. Warren Buffett obviously said, buy the fear, and we can see there is a whole lot of fear going on in the markets, as we know. So right now, if you're experiencing, or if your type of investing style is long term, I would consider buying the dip, as Warren Buffett would say. As far as that goes, that's my technical analysis. That's my position my position update on what I chose today, which was the 384 and 385 puts. So furthermore, we'll go ahead and give that update for tomorrow. But as of now, this is all I'm really playing is SPY. I do have another position in AMC, and I'd like to share that. I went ahead and bought a few days ago, I believe it was here on Thursday. Yeah, Thursday, I went ahead and bought 14 puts. They have 60 days till expiration now. Well, at the time they had 60 days to expiration, and I'm expecting it to fall below 14. On that trade, I'm currently down around roughly 22%, and I'm holding, expecting it obviously to get a little bit further down into the money. And I would be happy with 2 points in the money. That would be great. But as of now, I see a lot of greed following in with this, and the probability of that trade working out was roughly around 62% that we would expire in the money. Not touch, but expire in the money. So if we want to go a little bit into the implied volatility and, I'm sorry, let's think about that. See, if we want to go a little bit into the September 16th, which is my position, we can see implied volatility is very high, so it's a great time to sell options or purchase, if really both ways. I would lean towards selling in a high implied volatility environment. And we're expecting an 8-point move. So if our probability of touching is 76%, and our probability expiring in the money is roughly, when I purchased, was 61%, we would have a 60% edge, or I'm sorry, a 10% edge of expiring in the money, and we can see the exact amount that we might be going into the money. Okay, so hopefully all that stuff makes sense. I'm all over the place. I'm sorry. I've had a stressful day. So anyways, we'll check back tomorrow, and we'll see how our positions are going.